All right, guys, so what I have for you today is a daily chart of the S&P 500. Now, just yesterday, the Fed raised rates another quarter point. So where are we going to go? Inflation's high, consumers fine, Fed's raising rates, the markets are grinding up. Where are we going to go on the S&P 500? Let's find out what the technicals tell us. So join me today. Okay, guys, so what I have up here is a daily chart of the S&P 500, the ESM contract, since we're trading June futures. Trading right now at 4,082. And what we had yesterday was the Fed came out. As anticipated, they raised interest rates again. So where are we at? Where are we likely to go? And the very first thing that I do is I go to a higher time frame on a weekly or a daily. And then I start looking at why we might be going where we are going, okay? And what I do is I'm looking at something called divergence, which is where we have a high in price, we come down, we make a higher high in price. But when I look at the momentum, according to our RSI indicator, we can see that the momentum of this uptrend is getting less because as price goes up, our RSI is telling us that the strength of that move up is failing, okay? Now, what we really like to see is if there's a really good level, like somewhere in here. This is all very wiki high. These are previous highs. Didn't take this trade because we don't have a very good level, a lot of topping. But we would look for a clean rally-based drop or a drop-based drop with divergence. That's one of our odds enhancers. But where are we going to go? All right. After the Fed's been raising rates, we've been on this interest rate hiking cycle. And you can see since then, we've still grinded north, which is really, really interesting to see that we've been unable to come back to these last year October lows, even in a period of interest rate hiking, right? And banks failing, SVB, First Republic, Credit Suisse. So many of these banks are failing, and yet the market's proven really resilient, and a lot of that is because of the consumer right now is so strong in the way of credit and savings and things of that nature, right? Housing market's starting to come down, so a lot of things going against the market right now, but it's being very resilient. But where are we going to go technically? All right, where are we going to go technically? And when I dive into that, we've come down and we are about to breach this March 26th low right here. All right, as the market opens today, we try to catch that bid up. You can see that we opened here, we rallied all the way up, but that rally's failing. We're coming back down to test this area. So if I wanted to be a trader, I can look at this rally, base, rally, right? It's not the greatest. This doesn't close inside of it. We might have to go from here to here. It's a little bit of a wider zone. And what will happen is if we approach this area, our momentum is going to be too low to take that trade. Our trend is going to start changing. We're going to create new lows with momentum below our 40 indicator, all right? But this is the most likely area that we might catch a bounce from. If I dive into a smaller time frame like a 4-hour, I can see that one of the reasons why I'm pretty confident that the market's going to go down continuing from here is after that divergence, look what happens, right? We have a drop, base drop that creates a new low down here, right? But when we come back up, we're not even able to test that level. We're not even able to test that level. And you can see here on this particular rally up where our RSI is. That rally just fails miserably. It doesn't even give us any amount of strength above 60 to lead me to believe that we might be able to go to lower highs. Same thing here. We come down. When we rally back up, we're going to be at a retracement area, right? And this is just what happens when markets start to turn is you're not going to be able to get in at these high time frame levels if the selling pressure is very strong. Came right back up between the 38.2 and 50% retracement on this big move down, which happened yesterday during the Fed announcement, right? We spiked up initially, we came slamming back down, we've rallied back up, had the retracement, now we're continuing down. Maybe the market is starting to believe that these interest rates are going to start affecting that credit cycle and that credit window will close. We'll see. So where are we going to run into? Well, I see a rally-based rally here. I see a rally-based rally here, right? So these couple areas before we get down into the daily level, I can change this to blue to represent the daily level that we found. Oops. I wanted it to be blue. Oh, set color for all curves. There we go. There we go. So we've got a rally-based rally, almost retested before the hike up. We've never made it back down into these areas. So, but these areas, as you can see, were below 40 on the RSI. And we don't have positive divergence, which would be a new low in price, but higher momentum. So if we do bounce from here, it's just going to be that. It's just going to be a bounce. So our markets are turning. All right, our markets are turning, and that tells me that the most prudent thing to do as a trader is to get short. So I look to a 1 hour level and I say, where can I get short? And when I go to these time frames, notice I've gone from a daily to a 4 hour. Now I'm in a 1 hour trying to determine what kind of direction do I want to trade. And I'm typically a daily and 4 hour trader, but for me right now, there's not a trade there, right? This is the daily level that we found. If we come back, I've already told you we're going to be below 40. The momentum is going to be too strong to the downside. So on the 4 hour, we're creating a new low right now, right? Do I want to be a buyer when that trend looks to be changing and momentum's on our side? No. Or not on our side? No, I don't. I don't want to take that trade. That's not a high probability trade. So if I go into the 1 hour, now I can start looking for levels potentially to get short, right? Because we've identified that trend is changing. And so I'll be looking for rally-based drops or drop-based drops. So I have a rally-based drop here. The problem with this is very wicky, right? We have this downward candle. We come back up before, very convoluted. And if you want to get super, super technical, we can look at this area and say, okay, this is technically a drop, drop, base, drop, retest, now we're dropping. Okay? And we created a new low. So where else can I find something on a 1 hour? I don't really see anything. I mean, maybe way up here, but the problem with this area is that if we come all the way back up, we're going to be creating new highs. One here, well, actually one here, and one here into that area. And we will be running into a problem with our RSI. Okay? Everything's about momentum, guys. We got the trend, we have levels inside that trend, and then we have momentum. Right? Those three things are the most important things in trading. And if we come back all the way back up there, that's going to be problematic on the RSI side. But if I continue to dive into a 30-minute, maybe I can find something. Drop, base, drop, respected, we move down. We came back into the level below 60, we move down. Right? Overall trends down. If I'm looking at a 30-minute chart, I want to back out to potentially a 3 hour. Lower highs, lower lows. On those rallies, we're unable to break 60. Right? All of these things exist. So my belief, I'm not going to dive into smaller time frames. I'm not a scalper. This is not the way I trade. I look for big moves and big swings in price. And for right now, guys, my belief is that the S&P is going to move back down into this area around 4,000 before we catch a bounce. And along that way, we should be able to find some shorting opportunities.